This morning, Fidelity Canada launched 3 new products built on Fidelity's robust quantitative and fundamental research. These new products are managed by Fidelity's Quantitative Research and Investments team. And in today's digital age, where data is playing an increasingly important role in every facet of life, quantitative investing is expected to grow in the marketplace in the years and the decades to come. I'm pleased to be joined today by Neil Constable, Fidelity Head of Quantitative Research and Investments, to unpack how the Quantitative Research and Investment division fits within the broader Fidelity ecosystem and share how these new data-driven products may benefit you and your clients. Welcome, Neil. Great to see you again.
Hey, Glenn. Glad to be here.
Now, I'd love to just, because we're getting into data-driven investing today, and your division, which is QRI, as I just talked about in the introduction, it's coincidental to me and to our viewers, I'm sure, that today, if you're reading about DeepSeek, the founder had started, he's a mathematician, and he had started a hedge fund, and he used all sorts of quantitative stuff that similar to what we're going to talk about today. And it just goes to show that it's not that, that this is quite common, it's becoming more common, and there's a lot of, in a different realm, obviously, but the quantitative tools that DeepSeek, their hedge product and so on are using will have some similarity in jargon to what we're going to talk about today, but Fidelity does it in a very different day, in a very different way, and I'd love you to define what QRI is all about at Fidelity, Quantitative Research and Investments.
Yeah, sure. Happy to jump in there. Yeah, and I think DeepSeek is a great example of a broader theme I was going to talk about today, which is this idea that this data and technology revolution that we've all been living through for the last, call it 5-10 years, cloud computing, AI, big data, whatever you want to call it, is upending every industry in the world. And the industry of asset management and everything that entails trading, research, and so on and so forth is no different. It's being changed as well. And this group out of China that launched DeepSeek, it started in a quantitative hedge fund that does high-frequency trading, which is very, very different from anything we're doing here at Fidelity. But the theme is similar in that data, technology, and quantitative statistical skill sets have been brought to bear to, in this case, push the ball pretty far down the field. And so, in that spirit, Fidelity created this organization, Quantitative Research and Investments, or QRI, that I'm lucky enough to lead about 5 years ago, to bring to bear those tools, again, all the data and technology, to our type of investing, our style of investing anchored around longer term earnings power growth and so on and so forth. And there's a whole bunch of applications in our realm as well. And that's what my organization was set up to do 5 years ago. So I'm pretty excited about it.
And a lot of people would define Fidelity as a fundamental shop. I have seen how there's almost a Venn diagram of fundamental, technical, and quantitative. And we haven't talked a lot about the quantitative over the years, and that's changing now, isn't it? What's the evolution been for the quantitative component?
Yeah, no, that's a good question, because I think, and I've said this in the past, the beginning of my organization that like I said, I lead here, the genesis of it was 2020, actually, during the pandemic when we began. But Fidelity's work with quantitative research and incorporating it into the overall research process goes back decades, depending on when you want to start measuring. It could be the 80s, certainly the 90s. And so it's not new to Fidelity. What's new in the last 5 years is in recognition of everything I was just saying, this data technology revolution, the importance it's having on everything in the world, including investing, is we've turned it up to 11 at Fidelity. And so that was the change, and they created this organization, QRI, here at Fidelity, and asked me to come in and lead it. And it's been a lot of fun. But like I said, and increasingly, because and what this is recognition of is, like I said, this influence of all the data and technology. And really what we're getting towards here is, remember, what everyone knows Fidelity for is a great active management shop. Our ability to outperform indices, add value over and above stated benchmarks, whether it's in equity or fixed income, has been building for decades. And active management is the act, if you will, of going out and finding information, processing that information, and doing a better job of connecting dots and making great investments on behalf of our customers than anyone else. And to the extent that that process is being influenced by quantitative techniques and data science and whatnot, it's not really about, are you a fundamental shop or a quant shop? right? We're an alpha shop. First and foremost, we're here to add alpha in our customers' portfolios. And as the world changes around us, we need to be constantly investing in what's the most relevant tool for the job, which is, by the way, not to say that we have any less dependence on our traditional core fundamental investment research process, which we've been building and nurturing for decades. Highly trained fundamental analysts that meet companies, think about how to connect the dots between the macroeconomy and individual company earnings prospects. That is an invaluable skill that forever will be part of what we do here at Fidelity. And what we're talking about now is augmenting that with all the things that come with the data and technology that's now available, and we can use in ways that we couldn't use before.
And in order to augment what we've been doing, that must take a huge team. Talk about the size of your group that you're responsible for.
Yeah, so the QRI organization is now approximately 200 quantitative researchers and portfolio managers. And we work side by side with about 250 we'll call quantitative developers, so software engineers, data scientists, and other technology professionals. So all in, you're talking of about a 450-person organization at this point.
And your group's looking at reams of data. That's internal, external. You've got a huge team. Private ownership must help in order for Fidelity to build this out. Not every company can do that.
That's a very important point, Glenn, because I think anybody, especially quantitatively oriented people, but really anybody who thinks hard about the problem isn't going to dispute or argue with me that more data, all else equal, is better. The ability to do more rigorous or sophisticated analysis on that data, all else equal, is better. But where it gets tricky is when you realize the extent of the investment, like you're pointing out, that the extent of the investment that's required to do this on, for lack of a better term, an industrial scale, a comprehensive scale. And we're talking, hundreds of potential data sets that need to be looked at. We need to build a technology stack that's able to onboard those data sets, help us clean it up and make it appropriate for investment research. We need to develop the tools to do that research, get it into the hands of portfolio managers. Like for those of you who logged in earlier, Mark Schmale was talking, him and the other PMs at Fidelity need to get this information in their hands. But also we need to hire the talent to do all this. And so it's not as though you're going to take somebody who is highly trained and effective at interviewing a CFO or a CEO about their business model and turn them loose on a multi-terabyte database full of cell phone tower data. Those are very, very different skill sets. And so we need to build the tech, buy the data, hire the talent, and incorporate it into our existing process. So that's a very expensive and more importantly, time-consuming process. To get that right, even if you've got unlimited money, which nobody does, but even if you did, to get that right would still take many years. And when you're a private company like Fidelity, you can decide to make that strategic investment and plan for how do we make Fidelity as relevant 10 years from today as it is today. And that's the nature of the investment here.
Just a reminder to our viewers, if you have any questions, do send them in and I'll get them on the screen here and be sure to try and ask them when I can. Just a quick comment on hiring. I saw a LinkedIn post from a competitor of yours recently and it said, looking for a quantitative researcher. If you're interested, let us know. I'm assuming that's not how you build out the team.
I mean, I do occasionally learn things on places like LinkedIn, of course, but like anyone else. But no, my background, I think we'll get into in a minute. I've been doing quantitative investing for my entire career, which is now more than 20 years. And I've spent that time, in addition to my day jobs, scouring the industry for the best data, the best technology, and the best people. And you build up networks over time. And so when I had this opportunity at Fidelity and the initiative is here and the desire to build out at the scale we have, I extensively tapped this network and was able to hire some top talent from traditional competitors of Fidelity, as well as from various hedge funds and other asset managers globally.
Let's get into your background briefly. We'll take a lot of experience and briefly talk about it. You have an extensive background in physics and in mathematics. And my recollection is your thesis for your PhD was in the connection between quantum field theory and gravity. And we're not going to get into that today, but What led you into the investment world from the expertise that you developed from an education standpoint?
Yeah, no, this is something, and many of you might have heard me talk about in the past. I thought about this a lot because there is nothing going on in investing that is, directly related to quantum field theory or general relativity or black holes or anything you might hear about in popular science. So the subject matter isn't shared between my background and what I do today. What is a shared, I guess, skill set or set of ideas is when you boil it down, what a physicist in my case, or really any scientist or engineer, we at the core, we're highly trained logical problem solvers. And by which I mean is, for any of you in the audience who took science classes in college or whatnot, you get presented with a problem, and the first thing you do is you make a list of the relevant variables that could help you solve the problem. And you figure out which of those variables you currently know, which of those variables you don't know. Then how would you go about finding out those variables, and then put them together to help understand whatever it is you're looking at. And that's a difficult skill to learn, especially as the complexity of the problems get bigger and bigger. But as I just described it, that's not so different from an investment problem. And so there's a lot of overlap between the techniques and tools of the trade for solving complicated problems that scientists are just taught for years and years, and what needs to happen in the financial industry. So I think that's where the shared expertise or knowledge comes in. But it's not in the abstract mathematics or theoretical physics. I mean, that's not really at play here.
Okay, wonderful. You've set the table very well for the QR part of QRI, quantitative research. Right. Just a question to add on to that before we get into the investment side of it. Questions just come in from one of our viewers asking how quantitative research incorporates AI.
We certainly make use of AI. And this predates anything around large language models or anything like that. So I often refer to, I guess these days I have to call it AI classic. But things like neural nets or even simpler things than that, which are still pretty complicated statistical models. That's been a huge tool for quants going back forever. Because we are dependent on data, and when you have data rarely shows up in a usable format. So you have to do multiple things to that data. You have to clean it up, organize it, and figure out how it's related to the thing you actually do care about. Or in many cases, just extracting the data is very complicated. So think these days, right? We get lots of data from text, or from video or from audio. And AI is immensely valuable in helping us extract the data that we need for investment processes from the raw data sources. It's also immensely valuable helping us organize and classify the data. It's really a tool of the trade for many parts of the quant research process. And that will increasingly be the case going forward, of course, because it's just getting better and better all the day, every day.
For the purpose of our discussion today, because we have only 30 minutes, I hope that some of our viewers, or all of them, will tune in and watch the replay from what we did at the Vision event last week. If you'd like more details around the quantitative research process and examples of the slicing and dicing of data. But we don't have time to get into all of that today, and it was nice to have had that discussion last week because we had more time. But let's get into the investment side of QRI. Today is a fund launch of 3 new products that your group is responsible for. So congratulations. Absolute Income Fund. That's the first one we should talk about. Give us a high level on that.
Yeah, so the Absolute Income Fund is obviously it's a fixed income product, and it's purely quantitatively systematically managed. And this is actually a really good example of data technology, quantitative techniques starting to make significant inroads into parts of the industry they might not otherwise have been applicable before. The fixed income markets are inherently more complicated than the equity markets, just by virtue of the fact that there's hundreds of bonds from any given issuer. Every one of them has their own terms and conditions. Often the data that's relevant for understanding the bonds is in textual documents, like I was just referring to. So things like natural language processing are highly relevant just to get going in the fixed income space, but all on research. But all that aside, one of the other things that we're able to do in the quantitative space when it comes to fixed income is because there's many different variables at play, we're actually able to design outcome-oriented solutions for our customers, all the while taking advantage of the best fixed income thinking that Fidelity's built up over the years. So, for example, with the absolute income strategy, what we're trying to do here is engineer a portfolio that is designed to get good absolute returns relative to a core or a core plus type benchmark, but with a specific focus on doing that while generating a high level of income, right? So coupon yield and income, which is only one part of the total return equation. But because our customers, we've heard loud and clear, have a desire to generate income from their portfolios, what we can do, because we have access to powerful optimization tools and so on and so forth, is we can create portfolios that get good returns in the traditional sense versus a benchmark, but do it in a way that we maximize the amount of income generated. So, for example, this product is aimed at generating 90% of the yield of a high yield index, but it's not exclusively a high yield product. It has exposure across the asset classes in the fixed income.
So that's the absolute income fund. How do you see an investor using that as far as, does it complement the traditional fixed income solution they may be using? Do you see it as a replacement? Where do you see it fitting in?
I see it as being a core allocation, honestly, for an investor who wants to have some risk in their portfolio from the bond markets, is willing to have exposure to high yield or emerging markets. So it's on the slightly riskier end of a core plus fixed income mandate, but they have a need or a desire to generate income from the product. So it's an active core plus type product that is aimed at generating a lot of the return as income. And so for investors who have that need in their portfolio, it can serve as a core building block. Absolutely.
Very good. The second product we're going to talk about is advanced U.S. equity. Let us know about that.
Yeah, so advanced U.S. equity is a really interesting interplay between this QRI division that I lead and our traditional fundamental equity team. And so one of the things that we were able to do, you and I talked a minute ago about lots of this, the data that's available out there in the world, or at least we alluded to it, right? So I mentioned cell phone tower data that lets you track foot traffic through shopping centers. And if you watch the video you alluded to from my presentation last week, I talked about this whole supply chain of chocolate bars and a whole manner of hundreds of data sets. What I didn't mention yet is the internal data. Our fundamental equity team has, almost a couple hundred fundamental analysts, portfolio managers that are generating investment insights every single day. Whether it's a change in a price target, a change in an earnings forecast, it could be a change in a rating from a strong buy to a strong sell or something in between. A portfolio manager could tweak a position in their portfolio. Whatever it is, across just the large cap U.S. market, so the Russell 1000, which is the benchmark for this new product, this advanced U.S. equity product. Just across that universe, we get about 50 pieces of information every day from our analysts and our portfolio managers, meaning somebody in the team has upgraded a price target or changed an earnings forecast or changed a growth estimate in one of their models. And these can be in and of themselves small changes, and certainly not rise to the level of someone like a Mark Schmale taking action in this portfolio, but there is incremental information there nonetheless. And so what the advanced U.S. equity product is designed to do is to systematically collect all the insights from our analysts and our portfolio managers as they're going about their business of evaluating companies, thinking about the macroeconomic impacts of whether it's geopolitics or technology changes. As they're going through that whole process, they're producing data about how they view the world. And what we're doing is we're systematically collecting that and representing it in a portfolio that is aimed at getting purely idiosyncratic exposure to our best thinking across Fidelity. And what I mean by idiosyncratic is we are intentionally not taking bets on things like value versus growth, or small cap versus large cap, or high momentum stocks versus low momentum stocks. We're really trying to zero in on these really idiosyncratic, differentiated views that are generated by the investment professionals in our fundamental equity team, who we're partnering with closely on this product. And so the idea is, to, again, like I said, this can be a core portfolio holding because it's not meant to have any of these style bets that our portfolio managers think hard about when they take them, our fundamental portfolio managers. It's not meant to have any of that. It's really to zero in on these idiosyncratic bets. So it's like a core position in a portfolio designed to add alpha over the benchmark from our bottom-up individual insights, and is a very nice complement, in some ways orthogonal to what we're doing in our more traditional fundamental equity funds. So yeah, no, it's a very exciting product, and it's something that only Fidelity can do because we have 200 analysts and PMs producing this data. It's proprietary to Fidelity. It will never leave the four walls of Fidelity, and it's generated by people who are well trained and unbiased, but arguably one of the best fundamental shops in the world. So it's a great product and a great way for Fidelity's customers to get even more exposure to our best thinking.
I love the way you talked about it as a bridge between the quantitative team and the fundamental research team. It shows that you're not working in a silo. There's a synergy. That's what Fidelity's all about. As you said, it's an alpha shop. What do we need to use? Where did this idea come from? Was it because you had this flow of information from the fundamental side and said, you know what, we've got to use this and make it something that works in concert with the quantitative research side?
Well, I think it's a truth about the world in active management, if you'll let me be so grandiose, because it's all about you have to have edge. To be an active manager, you have to have edge over the competition, right? And edge means you have a differentiated view than the rest of the industry, so you're not consensus, and more often than not, you're right about that view. Okay, so but where does edge come from? Edge comes from data. You have to have information, and then you have to connect the dots between the different pieces of information to have that aha moment, right? And so if you think about it that way, if you're really going to have sustainable edge over the competition, you either have data that nobody else has, right, which is very difficult to achieve legally, right? Or you have ways of extracting information from commonly available data that other people can't execute on, right? They just don't have the tools and the techniques. Now, that's possible, but also very hard because it's a bit of an arms race, especially with AI, right? Like, once I learn how to do something, there's lots of smart people in the world, they're going to figure out how to do it too. So both of these things are very difficult. And so what we realize is we have this because we have so much more history and breadth with our fundamental investment teams, they're producing more relevant data than almost any other shop in the world. It's proprietary to Fidelity. So we actually are in a position of having data no one else has. And so the question was, how do we maximally take advantage of that? How do we create a product that lets our customers access every possible insight we have in a single portfolio? And that's really the genesis of this. It's something we believe we're almost uniquely well suited to do.
That sounds very powerful. The third fund launching today is Core U.S. Bond ETF. Please tell us about that.
Yeah, so the Core US Bond ETF is really cool. Just to get people, it's a core bond product, as the name suggests. And it's really great as a building block for any asset allocator who's trying to assemble a bond portfolio and sort of think in the 60-40 type context. How do you build your bond, the 40 part of that portfolio? This can be a core allocation there. So it's a building block for that type of thing. And what it's designed to do is to generate outperformance over and above a classic, the Bloomberg Ag benchmark. But it does it in a way that is very analogous, and I use the word analogous intentionally, to what the types of strategies that were run very successfully going back several decades in the equity markets, but up until very recently were very difficult to implement in the fixed income markets. So it's identifying what we call factors, but they're characteristics of securities. So does it have good value? Is it cheap? Does it have a lot of carry? Is there a lot of momentum behind that security, that issuer, right? And building portfolios that have a lot of exposure to those factors, because on average, over long periods of time, systematically having, owning bonds that are cheaper than fair value, or owning a lot of carry, or having good momentum in your portfolio has generated outperformance. And this is something that has existed in the equity markets for many, many years, and only recently become something that's easy, that can be implemented in a really effective way in the fixed income markets. So what we're doing here is I've got a fixed income team that I was able to hire from some of the top fixed income shops in the world, working on quantitative approaches to doing just what I described. And so they're creating an alpha product that is can be a core holding in an asset allocation type framework. Is using things like value, carry, momentum, sort of long-term static factors, or sorry, not static, but like longer-term, slower moving factors that can be built into a portfolio, and we can engineer our performance in a very risk-controlled manner to serve as that kind of core holding in an asset allocation type setup.
That's very interesting. So if I could summarize, the absolute income fund is about an investor looking for income. It's quantitative driven, and it's diversified through income-producing assets. Advanced U.S. equity is really the best of Fidelity fundamental research and quantitative research melded together. The core U.S. bond ETF that you just talked about is taking a traditional bond portfolio and looking at how equities have been run in the past from a factor standpoint and implementing that sort of diversification and research into a quantitatively run fixed income ETF.
Correct.
Interesting.
Correct. And with of course the proviso that the fixed income markets are much more complicated than equity markets. So it's sort of it's analogous, but it's
Right.
History doesn't repeat, but it does rhyme. And I do think that back to where we started, this big onslaught of technology and data in the last couple of years is starting to change the fixed income markets, and they will start going down a path that looks similar to how the equity markets evolved 20 years ago.
Okay.
But it will not be the same because it is more complex. And what we're here to do with both these fixed income products, the absolute income fund and the core bond fund, is to be right at the forefront of that and make sure our customers are able to take advantage of those advances in technology.
Right. We just have a few minutes left, so let's look at it as the future. These three products that we've just talked about that are launching today, will they stay this way for the rest of their life, or is this an evolving solution or series of solutions because of your group also evolving with the world?
It's absolutely designed to be evolving. So let me talk about the advanced U.S. equity product first. This is a really interesting one because yes, it's dependent on quantitative techniques, us knowing, being right at the cutting edge on risk models, portfolio construction, transaction cost management, and all those things. But it's also going to evolve because, remember, the idea generation here is happening within our fundamental investment teams. So as they start changing the way they evaluate different businesses, right? Because what are they doing all day long? They're trying to figure out who's going to be the winners and losers from changes in technology across all industries. And so they change the way they view the world. So the way that the inputs come to us is going to evolve as our fundamental investment teams evolve their thinking. But that product will always be up to date, because it's not relying on some quant research saying, hey, this worked 30 years ago, it's going to keep working in the future. It's just saying, hey, our fundamental investors are really good at what they do. Let's make sure we're always running a product that keeps tabs on that. On the fixed income side of things, absolutely. Like I mentioned, it's been known how to do this type of stuff in fixed income for a while, this factor-based investing. But implementation is very difficult because spreads are very wide and liquidity is wildly different in the bond markets and the equity markets. But as that starts evolving and electronic trading or something that looks like it starts to come up in the fixed income markets, we're going to be right there on the forefront of how you can implement these strategies and execute these most effectively, so that the insights that we think are all there, but were difficult to execute before, we can get them in the portfolios, let our customers take advantage of it in a risk-controlled, cost-effective manner. And back on the absolute income, of course, as our customers' needs evolve, if they have different preferences for income generation, or there's new opportunities, new types of securities that have more income associated with them, we can pivot and make sure we're generating the income from that as well. So it's meant to be very dynamic. What's the common core that stays constant is the systematic, rigorous, scientific-driven approach to understanding the data and how best to execute in the portfolio. That stays constant. What comes out the other end of it is meant to be dynamic in the way you described. So.
Perfect. I feel like I've just seen a bit of the future by talking to you today, and I hope that our viewers feel the same way. And I also hope that our viewers will check out the replay, when it's available, should be shortly, of the Vision event last week for more details on all of what Neil's talked about today, and then couple that with this discussion today. I hope it was very well received by everybody. And Neil, thank you so much for taking the time to speak with us today. Congratulations on the launch.
Of course, Glenn. No, this is very exciting, and I think everybody, my team, but all of Fidelity is really excited about this, and so we look forward to working with everyone going forward.
Wonderful.
Thanks for listening to the Fidelity Connects podcast. If you haven't done so already, please subscribe to Fidelity Connects on your podcast platform of choice. And if you like what you're hearing, leave a review or a 5-star rating. Fidelity mutual funds and ETFs are available by working with a financial advisor or through an online brokerage account. Visit fidelity.ca/howtobuy for more information. On fidelity.ca, you can also find more information on future live webcasts, and don't forget to follow Fidelity Canada on X. The views and opinions expressed on this podcast are those of the participants and not necessarily reflect those of Fidelity Investments Canada ULC or its affiliates. This podcast is for informational purposes only and should not be construed as investment, tax, or legal advice. It is not an offer to sell or buy, or an endorsement, recommendation, or sponsorship of any entity or security cited. Read a fund's prospectus before investing. Funds are not guaranteed, their values change frequently, and past performance may not be repeated. Fees, expenses, and commissions are all associated with fund investments. Thanks again, and see you next time.